Hello, good morning. This is Mr. Ayazuddin S. Khan from Pune, Maharashtra State, India. So far, we have learned two basic things about the Income Tax Act 1961. That is, Income Tax Act is a central act, first thing. Then second thing, we have discussed about income. What is income? And types of income. Now, today, we are going to discuss the concept of person or who is a person. What are the types of person? So, this is also a very important term, and it enjoys the consistency of the act. Throughout the act, if this word comes to your notice or while you read the act or some provisions of the act, whenever you find this word person, immediately you will get the types of person before your memory, and you will enjoy that consistency. Wherever this word is there, the meaning is the same. So it is no doubt important term, and you have to keep in mind this term very carefully. So let us go to know what is person, who is person, and types of person. Person, as per Income Tax Act 1961, the Act tries to define, rather has defined, specifically defined the person. The term person includes 7 types of entities. The word person includes 7 types of entities. So, who are those entities? 7 types of entities. Who are those? So, first is individual. Second is Hindu undivided family. That is HUF in short. Third one is firm. That is partnership firm, which also includes LLP. Limited liability partnership, though these 3. Fourth is AOP and BOI, Association of Person and Body of Individual. This is the 4th one. And the 5th one is company. Then 6th one is artificial juridical person, or briefly legal person. And last one is local authority. So it is better we should know each legal entity, the constituents of the word person. The first part or first constituent of the word person is individual. I hope individual, there is no problem for you to understand or know who is individual. The individual is individual. He or she is individual. A person, a major person, one who is 18 and above, he is a person. He may be male or he may be female. So, he is individual. So, this is the first constituent of term person. Then second, we'll go to second one. Second is your HUF, that is Hindu Undivided Family. Then third one is, before we go further, we'll try to understand this entity, that is HUF, Hindu Undivided Family. Hindu Undivided Family is the way of living among the Hindus right from olden days. So these family members, they, that is father, mother, sons, daughters, they stay together and lead the life. If suppose they want to do some business, then that they also carry on that business, or they do that business in the form of joint family. The head, that is normally father, he is the head of the family. So he is in charge of the business. If suppose that HOF is doing business. So this entity, HUF, Hindu Undivided Family, it has to do its business, or it has to look after its assets, properties. As far as it is what you call remains undivided, it is the Hindu law that talks everything about HUF, how the property or the wealth of the joint family to be distributed when that HUF becomes divided, or it is it is dissolved. All the members decide to dissolve that body, that is HUF. Then naturally question will come how the assets of the joint family should be, how the assets of the joint family that head should distribute among its members. So Hindu law will tell about this thing. So this HUF is, Hindu law governs this HUF. So all the provisions for distribution of assets and liabilities, if you want to find out, you can find out these things in the Hindu Law Act. Okay. Then third comes your firm. Firm is a partnership firm, which also includes limited liability partnership. We know firm means partnership firm. So it requires registration under the Indian Partnership Act. So this entity has to get registered before starting business. Likewise, this LLP also has to do the registration under the LLP Act. Okay. So these two entities, or rather we will restrict to partnership firm, this legal entity or the constituent of the term person has to do the business as per the provisions of Indian Partnership Act and the Income Tax Act 1961. Two members can come together and do the business as far as partnership firm is concerned. Then if he has to add the members as partners to the what you call partnership firm, then there is limit laid down by the Act, and that limit is now at present, as per my knowledge, is 50. Okay, so this is about the third constituent of the term person. Then fourth one is company. A company also needs to be registered, and it has to do its business as per the provisions of Companies Act 2013 and Indian and Income Tax Act 1961. As this company gets money or funds from the public at large, they get lot of money to run the business or to form their capital. The capital means the funds to do the business, money to do the business. So that money, initially, those who form the company, they also bring their money, and because they want to do the business on large scale, they also obtain money, or they ask for the money from the public at large. If I and you ask money from the public, nobody will give. But company gets the money if it asks from the public. The reason, what is the reason? Reason is simple, that company promises a reward, or we can say this what you call some money in return. Just like if you put money in a fixed deposit, bank will give you the interest. Likewise, company promises that if you give money to us, we'll give you per month or per year this much amount extra per month, apart from your whatever money you have given to us. Apart from that, every year we'll give some money as what you call your share in our profit. Like this they say. So this is the attraction for the investor. Investor means public at large, who has got surplus money. If I have got, I will invest. If I feel investing, I will invest. It depends on one's choice to invest or not to invest. Investment, you have to purchase the shares of company. So this is the promise they give, and that is why they get the money. And only promise may be what you call good promise or bad promise, in the sense, if company also sometimes, not always, sometimes, some companies, they may cheat the what you call you. They will take money from you and they will close down the business and they will disappear. You cannot find out them, because you are not the alone who has given money to them. There are a number of people who have given money to them. So this is the problem with the company. So that is why before investing money or before giving money to a company who asks for it and promises some reward to you per year, so you have to think, you have to see their past performance. This is very important. This is a technical term, past performance. Performance. What is performance? That is the profit-making capacity. Profit-making capacity of the company. How you will find the profit-making capacity of the company? On the basis of two things. First thing is what you call their earning in the last 3 years. How much they are making profits, how much money they are giving to investors or the shareholders or to those people from whom the company has asked money and collected money, how much return, reward they are giving to each investor yearly, that you have to see. That we can find out these things from their what you call balance, final accounts. They call it final accounts. That is certified as true by the chartered accountant. This is one thing. Second thing, to find out the performance, as we must know this term also, as to know the performance of a company who has taken money from you on the promise that it will give good return to you every year. So second thing, second point for knowing its earning capacity is to know the share prices, at what rate the company shares are available in the market, stock market. They call it stock exchanges, stock market. So at what rate, at what price? Suppose the price initially when they floated the what you call issue, or they started selling their shares, that time price is normally reasonable or minimum, not maximum. In very few cases prices are price is maximum, but majority of the cases company, because it invites number of people across the country. So naturally they get, if suppose everybody all investor or those majority interested in giving money to company for their promise to give you return वगैरह, so they may they get, company may get lot of money to run the business. So initially they sell their shares, that is paper, some paper with guarantee or something. They sell the paper to the public, they give, yeah, this is our promise, this is receipt for receiving money. So we have to see at what price you are getting this share from the stock, open market or stock market. If suppose initially price is, as I told you, it is reasonable, minimum, and after gap of 6 months or 1 month, or after gap of 2 years, when companies gives handsome return or reward to the people who have given money to the company to run the business, then people will enjoy. So that is why that prices of the share, the prices of the share must have gone up. And if suppose initially the cost was 100 rupees, for example, 100 rupees, it is now in the market you get only at the rate of 1000 or 1100 or 1200 per share. That is very good jump in the price of the company's share. So this also shows that company's performance is good, and it is better or rather advisable to give money to the company to run the business and expect good return from the company. So this is the way company gets the money, and this is the way the people who give money to the company, they give on the hope that they will get good return as promised by the company. So this is fourth entity, that is person, the important constituent of the word person. Then next come AOP and BOI. AOP long form is Association of Person, and BOI is Body of Individuals. What is this legal entity AOP and BOI, Association of Person and Body of Individual? These two entities, they require no registration at all, like partnership and company. So they work or run the business or run their activities for earning money without registration and without with uh, out of the range of binocular, out of the range of seeing capacity of the income tax departments. So they do business without being seen by the income tax department. If seen means they will tax you like anything. So because you have not registered, there is no provision in the act to act to get your AOP or BOI registered compulsorily. There is no such provision. So they take the advantage of these things and they don't pay tax. They earn the what you call profit of their business, but they don't pay income tax. Then how it comes to notice of the what you call income tax department? It will come to the notice of income tax department when it submits, that AOP or BOI submits or furnish its income tax return to the income tax department. Then only they will come to know, yes, this AOP exists or AOP or BOI is there, and they are what you call filing income tax return, and they are paying tax also. So in this, then only the department will come to know about the existence of this AOP or BOI. Another thing about AOP and BOI is that AOP, BOI, they have to show the profits sharing ratio of each member of the that association, AOP. When the AOP or BOI, they do some business and they get some profits or earn some profits, then they have to show what you call profit sharing ratio or profit sharing percentage of each member of AOP or BOI. If they show such percentage, that AOP or BOI, if they show such percentage, then the result comes to this thing. All the profits earned by the AOP or BOI, it gets distributed. It gets distributed among the members of the AOP, BOI, and nothing remains for AOP or BOI itself. I think you followed this, because they have to distribute as per the ratio or as per the percentage agreed by the members. Now after distribution of whole profit, entire profit, then nothing will remain. So firms that AOP or BOI's income will be zero. Then income of each member will go up naturally, because they get the what you call profit according to their shares from the AOP or BOI. So in such situation, income tax department does not tax the AOP or BOI because there is no income for it. They have earned the income, but as such they have not kept anything with them. They have given back to, or rather distributed among the members as per the agreed rate. So department will not tax the this entity, AOP or BOI. But definitely they will tax the member who has received the share of profit from the AOP or BOI. But to catch that fellow member and to see whether he has shown in his return, whether he filed the return or not, he filed the return, whether he shows that income or not. To know all these things, department needs some sort of control to watch the what you call this member file the return or not, or pay the income tax or not if he file the return, because he falls in the range of taxable income. So they need AOP, BOI, when they distribute profits to each member according to the agreed share, and when they show this in the income tax return, then it becomes compulsory for them, that is AOP, BOI, to show each member's PAN, PAN, permanent account number. This is the what you call clue, important clue for the department to catch the member and find out whether he has filed the return, shown this income in his income tax return, and has paid the tax on it or not. That way they can find out who income tax department. So this is about AOP and BOI. AOP is a combination. AOP and BOI, it is a combination, just like partnership. Some people come together with common purpose. That is, common purpose is to earn the money, and they do some business, and they earn the money and they distribute among themselves. So AOP, the members is important. Please note, AOP, when you talk about AOP, then that AOP may be of individuals. Association, AOP long form, association of person. It may be what you call group of individuals, or it may be group of individuals plus partnership firm, or it may be group of individuals plus company. So just see, AOP can have as its member even company or even firm. So not only individuals plus this bodies, legal bodies, that is partnership, firm and company. So this is the important thing. AOP, we must remember, AOP members are not only individual human beings, but their members may be also what you call this other legal entities such as firm and what you call company. They can also become members of the AOP, and they can do the business. So this is what you call good knowledge. One should have this knowledge. AOP is not only for individuals. This is not the association of only individuals, but it is the association of individuals plus firm, or association of individuals plus company, or association of individuals plus firm plus company, like this. Now our this what you call BOI, body of individuals, as name suggests, body of individuals. So it is only this association or this group or this combination is only of individuals and not other legal entities. This is not the combination of individuals and other entities like AOP. Individuals plus firm, individuals plus company, not like this. BOI means only body of individuals. This BOI group includes only individuals and not other legal entities. That you must remember, and this is also good knowledge about income tax law and our this important third thing, person. So now this is AOP, we have discussed AOP and BOI. Now further, company we need not go into detail. Everybody knows company is a what you call legal entity. It is required registration under Companies Act 2013, and it gets money from the public. It gets money from its founder member, and they do the business, they distribute the profit, they pay the tax, their accounts are audited, वगैरह वगैरह. Then there is another constituent of the term person, that is artificial juridical person. Artificial juridical person. This is also new thing to people who are just started learning Income Tax Act 1961. Artificial juridical person means Hindu deity. Hindu deity. All legal entities are defined in the term what you call person. But where there is no what you call a specific mention about anything. For a Hindu deity, there is no trust there, but Hindu deity is there, and it has got the property, or somebody has given property, and rather transfer the property. Suppose XYZ transfer the properties to some deity located in his village. So that earns good income, that is crop in the form of crop. It earns, then it gets the donations also from the people, or the people who come there to pay respect to the deity, वगैरह. So they get the money. So government says we want tax on that income also. So it is a taxable entity. Who? Deity. Hindu deity is a taxable person, and as far as our this constituent of person is concerned, that is artificial juridical person. At present, we must remember Hindu deity is the example for this artificial juridical person. Okay. Now comes local authority. This is local authority, also simple thing. Local authority means corporation, that is Pune Municipal Corporation, Bombay Municipal Corporation. They are all legal bodies, local authority. They they get the funds. They get the funds from the respective state government. They also get money from the people who stay in that particular in the area of that local authority, that is municipal corporations. They pay the what you call taxes for the consumption of water, for using of road and other facilities. So they also what you call, they run some business also. Who? This local authority, bus services, internal bus service, city bus services, वगैरह. So they get income also from that source. So they are rich. As far as money matter is concerned, local authorities are very rich people or legal entities. So this is, I think, this is the last, seventh constituent of the term person. So I hope I have clarified the what you call term person, and it is a very important term. Throughout the Act, you will read this word person. Now, one important point is remaining. Why this distinction? Why this what you call separation, classification of persons, individual, company, firm, AOP, BOI, local authority, then that legal person, all these things. Why Act is giving all these things? That is natural question. No? Simple, one person, taxable person, you use taxable. Anybody is taxable person. This is the simple way to tell. But if you go into detail of the provisions of Income Tax Act 1961, this classification, then you will get, you will know the importance of this classification. Why Act has classified these people into individuals, then Hindu undivided family, and then what you call AOP, BOI, firm, company, वगैरह वगैरह. So this first thing, this classification is important in the sense this the what you call the tax rates, income tax rates on the income they earn. This a person earns the income and government takes tax on that income. So individuals earn the income in the form of salary, then company earns the income in the form of business. DET, that is artificial juridical person, earns the income in the form of donations and other properties transferred to it by donors, वगैरह. So, these income tax rates are different. For individual, income tax rates are different. For firm, income tax rates are different. For company, income tax rates are different. And for what you call AOP, BOI, and all other remaining bodies, for them also income tax rates are different. They get the exemption. Some entities get the full exemption. Some some don't get the exemption. They have to pay tax. So we must remember this classification is important because it depends on this what you call legal entity. What income tax rates to be one should apply to tax him. So our that individual must know, that legal entity, that person must know how much, at what rate I have to pay income tax on my income. So rates are different. That much you must remember here. This is one reason for classification of the what you call person into these 7 entities. This AOP, this what you call distinction, classification of this person into these 7 entities, that is also, there are concessions given by the government, tax concession given by the government, that they are also different from one entity to another entity. Individual gets some concession from the government at some different rate. Company gets some concession from the government at different rate. So this is another reason for making difference or making or breaking this term person into these sub-entities. So these 2 purposes are important. You must remember this for your knowledge. And I think I have talked satisfactorily on this important third thing, that is person. Then we will move to another important thing that we must remember before going to our main topic, that is income tax disputes and Supreme Court judgments on them right from 1970 to 2020. Till that time, okay, we'll meet. You see our third important thing, that is gross total income, in the next video. Okay? Thank you.